Hi, welcome. I'm Sarah D.
Dr. D.
We're going to have another economic conversation, and we're going to start with 3 questions, maybe 6. Does your car pay taxes? Does your house pay taxes? Does your corporation pay taxes? Should they? You get to help us answer those questions. And what do you think?
Yeah. So should is a hard answer is hard for me, right? Because that's a moral ethical question.
And you're an economist.
I'm an economist. I'm not neither moral nor ethical.
Okay.
So I don't know the answer to that.
Now that
one.
we've got that situated.
So that's a moral ethical question. Should they pay taxes? That's a moral ethical question, and that depends upon a framework, a moral ethical framework, and yours may be different than mine, right? So
we'll just go with do they?
Do they? And that answer is well. So to answer that, we're going to do it just a little bit different. Does my house pay taxes? Well, there's a property tax by the school district and a property tax by the village that I live in and a property tax by the town that owns the village that I live in. And those taxes are paid.
But our house
Has not written a check to any of those ever.
we haven't found when we bought the house, we were never given the key to the box that had the money the house was earning or something, right?
So
I don't know.
So my house doesn't pay the taxes I do. That's an interesting thing. And there's a gas tax for my car, and there's a
when you buy the car, even
there's a sales tax when you buy the car. There's a gas tax when you put gas in the car. There's an annual, or actually in New York it's every 2 years. I pay a tax that they call registration.
Yeah.
Right, but that's a tax. That's just a fee that I pay to the government for the right to have my car. And so those are taxes, and my car doesn't write that check either.
No, your car does not write that check.
Right. So those are so.
And neither does mine, by the way.
Right. And so the question is, does a corporation write a check? And that gets a little bit trickier, right? Because corporations do technically have income. But the thing to remember is that a corporation technically is just a legal document filed in a law office in some state capital.
So we're going to use our imagination, and we're
not going to get there yet.
We're not going to get here yet.
Yeah, we're going to talk about the house.
Good.
And let's just say that you own 5 houses and you rent them out.
Yes.
Okay.
Sounds like a lot of work.
So you rent them out. And you don't like the lot of work, so you pay a service.
I do.
You have employees that take care of the collecting and the sending out of the rent bills and all of those kinds of things. So you have that. And you collect rent, or they collect rent for you, and they put it in the corporate account. And you as the owner get to keep all of that money, right?
No.
Oh, you don't?
Well, I would have to share it with the person who is doing the actual labor.
Oh, that's right. You have to pay them.
Well, they're not going to do
workers,
it just because
you have to pay the workers.
We're friends,
Right.
or I mean, we don't even have to be friends. We just have to have an agreement that we keep.
And let's just say that you own the houses right out.
Okay.
So you own them right out, so you don't have a mortgage payment on them.
All right.
Okay, so let's make it easy. But those houses do have a property tax levied on them.
They do.
And let's just say that you're charging your tenants $1,000 a month.
Okay.
So you charge them $1,000 a month to live in your house, and the property tax goes up on your house.
Again, I haven't figured out where the place that the house keeps the money is, so I don't know how the house is going to pay it.
Right, so you've got this $1,000 a month coming in, and let's just say it costs you $100 a month on a house for each house to pay the new or the raised or the extra property tax. Right. So it's $100 a month for the raised property tax. So technically, you could be taking 1,000 in from each house, and now you're only keeping 900 of it.
Right, because you own the houses outright, so that 1,000 could be just your straight income.
Could be your straight income, and now you're just making.
Now you're losing that $100 because
the government's
taking it.
Beautiful.
And so, taxes are just killing you, and you're not your house.
Right, your house isn't paying the tax.
But it's you.
You
'Cause
are what? You're the owner. Okay,
You're
so
the owner.
you used to have $1,000 per month per house, and now you have $900 per month per house. So you, the owner, are paying the tax. That's one way it could go. Another way it could go. Let's say you didn't want to lose.
Really?
Yeah. Let's just say you didn't. What could you do to your tenants?
Well, I could say, hey, listen, taxes have gone up. We all got to foot the bill, so we're going to split this up.
Well, you're a much nicer person than I am.
Or I'm going to put it all on you.
I'd put it all on them.
Because you're the one in the house, and if you owned a house, you'd have to do this. So it's just like grow up.
Grow up, yeah.
I don't have to grow up because I own a house.
So
I don't know.
what do we call those people? The tenants. What would we call them in general terms?
Customers.
Customers. So maybe I can push it all off in prices. So I push the price up from $1,000 a month to $1,100 a month. So who's paying the tax then?
The customer is.
Not the house.
Well, no,
Still
because
not the house?
we haven't figured
No,
out where that.
we put a tax on a house.
I know that. Houses don't pay taxes.
Houses don't pay taxes.
They're belligerent.
They are.
They're
just stubborn that way.
They have no social welfare function or desire. They don't care about you. They don't care about me. Houses don't.
So the other thing we could think about is there's one other place we could do it. We could buy fewer services. We could have
The people who mow the lawn and the people who do the repairs.
Yeah, we just hire them less. We pay them less.
Yeah, and so then
we could pay them less by $100 a month.
So then the people in the house don't have to have
higher rent.
Higher rent, but the quality of the house is going to go down because quality of the house is always going down. Entropy's going on.
Yeah,
it's happening.
So the workers could pay the tax, right? So technically,
well, actually, the workers and the customers, because the customers are going to have less of a house.
Maybe,
it's going to fall apart more.
Maybe not. Right there's
maybe
not.
Okay.
Let's just pretend like we were able to do that.
Okay.
So
keep it in this
simple. Yeah, in the simple. So there are three groups of people that are associated with this housing conglomerate. There's the owner of the houses. That's you. You could pay all of the tax.
I could.
There's the renters, the customer. They could pay all of the tax. There's the workers, and they could pay all of the tax.
Yep.
So there's a way that we could imagine any of those three groups paying all of the tax.
There's a lot of different ways you could break it up. Exactly.
Right. But what's going to happen? What's going to happen? Is it going to be all the owner that pays the tax?
No,
no.
It's going to be some third, but maybe not third.
Yeah, it's going to be split up across these three people, these three stakeholders, owners
of this house,
workers, and customers. Okay, so we just talked about that house business. Corporation, exactly the same concept, right? It's exactly the same concept. It has owners, it has workers, and it has customers. And those are the three groups that income. So the corporation sold its goods or services out into the public offering place,
right,
and generated income coming in.
Right.
That income coming in then was paid out to workers and in salaries and that kind of stuff, and then paid out into owners in profits or capital gains or however they go. Right, we can talk about all the ways that owners get value out of it, but
if you have investments, you are an owner of some corporation.
Yes, absolutely. I'm an owner of 500 of them.
Yeah. So when the corporate income tax goes up, the corporation is not paying the taxes. You are.
So somebody is.
Well, I thought we just kind of figured out that
one of those three. We haven't figured out who's paying them yet.
Well, doesn't it determine on the corporation itself?
Well, sort of, kind of, but
Okay.
but we can push this a long ways where we can say,
let's push it.
Who's paying most of it?
Who's paying most of
And
it?
we can answer that question. We can really answer that question.
Okay, what is the answer?
Well, so the answer to the question is the person who pays most of it is the person that can't complain about getting it pushed on them.
Who would that be though?
Ah, that's a good question. So let's ask ourselves that question. So let's pretend like the corporation makes T-shirts here in the United States.
Yeah.
And we put a corporate income tax on all corporations to include this T-shirt manufacturing corporation.
Right.
Okay, so my first goal as an owner would be to push that that extra cost onto my consumers.
Well, of course.
How would I
because
do that?
You just raise the price of the product.
What's the
Service.
problem? What's the problem with a T-shirt manufacturer raising the price?
Well, the problem is that people want to pay a lower price, and so people will not buy that higher priced T-shirt unless somehow it's going to do something for them, or they believe it is.
Or it's the only
another-
place they can get it, right?
Yeah, or that another T-shirt. Yeah, but somehow it's better, or yeah, a monopoly of some kind.
Yeah, so when we talk about T-shirts, by the way, so I'm an American T-shirt corporation, and you've put a tax on me, and I want to push it off onto my consumers, so I try to raise the price on my product to my consumers, and my consumers stop buying my T-shirt because there's one made in Bangladesh that doesn't pay American corporate profits tax because it's not an American corporation.
They don't do it.
They just don't pay the tax, and so their T-shirts are now cheaper. And you and I both know what we're going to do when we go, oh, wow, these are 2 T-shirts.
No, I only buy American.
Yeah, no, I don't. I don't even think this was
Probably not made in America.
Taiwan. Okay. So my American flag tie was made in Taiwan. That's part of China. Well, sell us anything.
We're supposed to feel guilty.
I feel guilty about it. It looks nice. So
I like
it's if there is reasonably open trade.
Well, the thing is, American people don't make things. Oh, I'm sorry, I interrupted you. They don't make as many things.
We make a quarter of the stuff that's made in the world.
But
So we make a lot of stuff.
But we charge more for it.
Well,
That's what we're
there are
doing.
just some things we don't make. Right? We're really, really good
We
at
would charge more for this tie than they did.
yes. But the idea of making this tie was an American thing.
Right.
So, I mean, we make stuff. We make ideas. We're great at making ideas. We're the best idea makers in the universe. Nobody makes ideas better than we do.
But
And people pay for our ideas. Yes, it's a beautiful thing.
okay.
But things is cheaper made everywhere else, right? So things are made cheaper everywhere. Your iPhone, where's it made? Oh yeah, China.
Yeah. So if you don't like his tie, just get rid of your iPhone.
Yeah.
So we're done. We don't want any haters. But,
So,
you know,
but the idea is that I can't push the price up. I can't push the price up if I'm an American corporation, and I'm competing against foreign companies. Right? If my market has foreign imports in it, I can't compete against it if I push my price up. So I am not capable. So my consumers are insulated against paying the tax because they just won't. If I force the tax onto them through product price, they'll buy from Bangladesh. And now they're not paying the tax, right? So consumers can avoid the tax very easily as long as we have open and free markets.
all right. So the consumers aren't going to necessarily. The customers are not going to necessarily pay the tax.
So we've eliminated one of them from being a major payer of the tax.
Right.
So let's talk about owners. The owners could pay the tax.
Yeah.
Right? So just like I could have said, just like for you, right? So you had $1,000, now you only get to keep $900.
Right.
Okay, so let's think about that. So the deal is that corporate ownership is pretty. How hard is it for you to move where you own stuff?
Well, there's a big initial expense if you're going to go into a different country or even a different building.
But do I as a stockholder, an owner of Microsoft or whatever, do I even have to build a new factory? What do I do?
I don't know.
I just stop buying American stocks and start buying foreign stocks.
Of what?
Instead of Microsoft, I buy Philips.
But what does that do?
That means I'm no longer paying corporate taxes in America because I've got a European company that I'm an owner of now, or a Chinese company I'm an owner of.
So you stop being an owner of an American company.
I stopped being it. Period.
You
Yeah.
say I'm not playing in this.
I'm not
arena.
playing in this market.
This arena is
just like
hostile.
just like the consumer. The consumer
Right.
goes, I'm not buying American shirts. I'm buying
So when corporate taxes go up, it forces American companies out of business, and it forces them, it puts pressure on them to make a choice to have corporations in other countries.
But the stock owners won't stay if they aren't getting the kind of return that they're going to get. If I can get a higher return outside the country, I move outside the country because I care about my retirement.
Right.
Right? The reason I'm a stockholder, the reason I'm an owner of a dirty, rotten corporation is because I want to retire. And I want to live off my retirement. So that's what I'm going to do. Right? And so I will move to some other or some untaxed portion of the universe in order to do that. And I will do that. And it's easy to do.
And that's why China makes it, or Taiwan makes these ties.
Yeah, it's easy to do. So it's very easy for these things to be done. Now the question is, who can't dodge it? So we've said the customer can dodge it very easily. The owner can dodge it, maybe not as easily, so they're going to pay some of the tax. The worker. So if I push my tax cost back down on the worker by slowing down their promotions, slowing down the amount of raises they get from time to time. So I push it down into a lower wage bracket. So I push down on their wages. How do they get out from under it?
Can't help you there.
Well, they could move to Mexico, or they could move to Bangladesh, or they could move to Taiwan. But do American workers tend to move to foreign countries?
Not unless in the military.
So they are the ones that are going to get stuck with most of the corporate profits tax. The ones that can't escape it.
The workers.
The workers. So corporate profit tax is going to fall primarily on the workers. So it's a hidden wage tax. Right? So corporate profit taxes are just your congressperson saying it's unfair that corporation's not paying its fair share.
So
therefore,
we're going to make workers pay, the blue-collar workers?
Well, all workers. It doesn't matter what kind of worker, right? So if you want to break the workers down, there's two types of workers. There's management workers and there's not management workers. But the management workers tend to be more flexible. They can go overseas. If I'm a manager I can go and I can manage for an overseas corporation as opposed to for a local corporation. So they're more able to sneak out from under it. So who pays the most of it? The blue-collar worker. The worker that can't move. That's who pays it. That pays most of it.
So that's what's just happened.
We're talking about raising the corporate income tax.
And so you're giving yourself a tax if that's what you want.
If you're a worker, that's exactly what it is. And oh, by the way, different people estimate it differently. But if you look at economists that tend to work in Democrat administrations, those economists estimate that approximately 70% of the corporate income tax falls on the worker. That means 70 cents out of every dollar that's collected in corporate income tax comes from the worker. All right, so that's the Democrat side. If you were to ask a Republican side economist, they'd say like 95% comes from the work, right? So somewhere in between 70 and 95 is probably the right answer. Don't know what it is exactly. But
it's the brunt of it.
The brunt of it. The biggest piece of the burden of the corporate income tax is just a hidden labor tax. That's what it is.
So there you have it. So
the corporation doesn't pay it. The workers do. And then the owners. And lastly, the consumers.
Thank you for joining us in this economic conversation about corporate taxes and how corporations actually don't pay taxes.
They aren't real things.
No.
They aren't people. Yeah.
Thank you for joining us. I'm Sarah D.
I'm Dr. D. Namaste.
Make it a great day.